Economic growth is in focus, and next week we're going to get set to get our first look at the second quarter GDP. We're here to talk about what the latest data could mean for the Fed and its rate path. Dennis Lockhart, former president of the Atlanta Fed. He's now a professor at Georgia Tech. Good morning to you. We're all trying to gauge, handicap, or otherwise, read the tea leaves about what Jay Powell may do next and whether he, in fact, may lower interest rates come this fall, something that seemed to be off the table just a couple weeks ago that may be on the table again. What do you think?
Well, I'm listening this week, of course, to all the speakers, and they seem to be expressing openness to a rate cut in the near future. That could be September, it could be November or December, but they're certainly not disabusing the markets that could happen. So I think September is on the table, but it will depend upon how the next two or three inflation prints actually come out.
And how do you expect those inflation prints to come out?
Boy, I tell you, I start from the perspective that data comes in sort of in a sawtooth manner. Sometimes 1 month jumps up over the other, and it's hard in a short time frame to really discern exactly what the trend is. Certainly what we've been seeing this last quarter, the second quarter, is encouraging inflation numbers that are trending downward, but still we're pretty elevated over the 2% target. So, I'm hopeful that we see a consistent picture of small decreases in the pace of inflation.
Right. Two pieces of data or information that I thought were interesting. Yesterday, we had John Gray, who runs Blackstone, on the broadcast, and he said that he was seeing in their portfolio, which is pretty large around the world, that he believed that inflation was coming down. I don't know. Is there either a specific firm or place that you look for in terms of that data?
Well, I try as best I can to do what I did when I was at the Fed, and that is I try to form a synthesis from probably 10 to 15 different inflation indicators, including some of the trimmed mean and median kinds of numbers that come out of some of the reserve banks, and then pull it together and step back and ask myself, well, what's the trend here?
Right.
And the trend is clearly a let's just say a tentative resumption of disinflation. I don't think it's one number, Andrew, right. And I don't think the committee members look at just simply one number.
What did you think of Jay Powell's comments where he effectively suggested, look, we got to move before we get to 2%, that if we've waited to get down to 2%, we've waited too long?
Yeah, that's been the practice in many respects, just simply because of the lags in monetary policy having an effect on the economy. It's the old where the puck is going question, and he's repeated that several times. To me, that means that if we see continuing progress, we get closer using the PCE index to 2.5% or even a little below 2.5% on an annualized basis, then they'll be ready to make their first move.